Good morning, guys. Sorry, I'm a little bit late. I think about a minute late. Let's have a look at the charts. I've just put a trade on actually, so let's just have a quick look. See what we got going on. What I am trading today is the. Let me just change this foreground. Now, I noticed this is against the Wave Rider, but I'm actually trading the Aussie Swiss to the upside. Hold on a minute, is that? Take this one out. Get rid of that one. And I'm trading it off the 15 minutes time frame here. Just sort of seen a break to the upside here. Just there. There's a little break to the upside, and there's a hold here as well. So I'm just looking to see whether this one actually does this hold and take off. The stop is just below the lows here by it's around about 3 pips. Let me just see. Yeah, that'll give me enough room there. So yeah, the trade is a Aussie Swiss long. There is some data out from Switzerland in around about half an hour, which might put pay to this trade. We might just about get rid of it, but there's probably a little trend line here as well. So we'll see if this one can hold. Oftentimes it's better to wait for the news, but I like the setup. I like the break and the retest here. And if we have a look kind of through what's kind of going on, the Aussie's having a little bit of a rally. Let me just make that a little bit smaller. Aussie's having a little bit of a rally against some of the risk-off currency. So we're seeing it here against the yen, and you'll see this quite a lot against the yen today. Didn't quite touch that top line there against the CAD yen, but the CAD yen looks all right. As I say, the Aussie Swiss looks all right. I'm just wondering whether we might just get a little bit of a boost kind of early doors. Now there is a take profit level off the first area here, which will create a 2-to-1 on the daily. So just looking to see if we can get back to this zone here, rather than this being the resistance. Now, as I say, there is a wave rider that suggests that we should be trading short at this point after bouncing off the, what's it bouncing off? Sorry. It is bouncing off the weekly pivot, but as we stand, let me see if I can get this. Here we go. I know this is black, so this might not be quite as attractive to look at. And if it is difficult, let me know, and I can change the chart color and just put the weekly pivots in a different way. But if you look at it here, it's actually above the weekly pivot right now. And if you look at the 15, it's closed above the daily pivot. So the trade looks okay as a potential idea. That's the trend line break that I'm looking for. So it could come down and test this area again, nestle in here, which would be absolutely fine. You can see this bar's around about to close. The market's going to open up. So this might determine which direction we're going to go in. Here we go. Now this is the area, I just don't want it to take out. If it takes this area out, then I may well rethink this particular position. There's the trend line that it would need to hold. I don't think I'll have enough room if it closes below that area. I don't think I'll have that much room to kind of protect my my stop. So really, this area needs to hold. There is a bit of an issue with these kind of areas because it might well close below and then surge its way back to the upside again. So really, I'm looking for it to hold this area. A close below wouldn't necessarily get me out. I'd probably wait for one more bar, but it's going to be tough to kind of protect the trade, I think. if it doesn't manage to kind of get its close above. But we will see. The news might just put pay to this particular trade. Now, if we have a look at some of the other information that we got going, in our favor here, just checking what we got. Hi Gary, MP, what's that? Are we saying that it's bounced off the monthly pivot? My wave rider says the weekly pivot, because if you look at it here, this is the wave rider setup, if you like. This weekly pivot from last week. Let me just make this a bit bigger. This weekly pivot from last week and this bar. So there are going to be a group of traders that are sat under here, looking to push this one lower. But it's one of those things, isn't it? That maybe going against the wave rider is not such a good idea. But it's an intraday trade, and it's also early doors. Early in the month, first trading day of the month. If this one's a loser, then there's plenty of chance to make the money back if it doesn't quite work out. That looks like the target there. So 58. Well, call it around about the 58 level. So we're looking for around about 40 pips to the upside with a 20 pip stop loss. So looking for a 2-to-1. Let's see what we end up with. But let's also have a look around the grounds and just see what kind of messaging the market is giving, on the first trading day of the month. So what I'm trying to ascertain is what kind of sentiment is in the market. If we look at gold, what we've seen with gold is just a slight decline off the highs here. Which could suggest that the market is getting a little bit more confident. It might be more reflective of the dollar and the actual price of the dollar, but it could be suggestive that the market might be just taking a bit of profit on gold, with maybe some fear sort of dissipating a little bit off the back of some better than expected data. Gold is breaking to the downside on the 4-hour as well. So I would suggest that gold is probably getting into a little bit of a sell period, just looking at this. So that's one aspect. Silver coming down isn't so positive because obviously that's associated with growth. Who's that on the...
Hey, mate, how are you?
Hi, mate, how are you? I'm not sure whether that's for me. No, I don't think it is. I'm just going to mute that person. Not sure it is. Okay, so yeah, so silver coming down is not so positive. You can see that there's a head and shoulders pattern kind of formed here, and let's just see if that's played out. There's the neckline, and there's the shoulder. So I'd measure this. And now that has played out. So we've actually kind of hit the measured move for silver, and you can see that there's a horizontal level of resistance, support here as well. So silver might get a little bit of a push to the upside, but really trading it long at this particular point would be very, very dangerous, just because the measured move of the head and shoulders pattern has worked out. It doesn't mean it would be a good trade. In fact, it would be a bad trade, and what you'd be looking for is a retracement and then probably another sell-off. So silver's not really reflective of upside, being an industrial metal, but we can probably get a better view of an industrial metal from copper. So let's see if we've got copper here. What's this? That's platinum. That's gold. Have I got any copper? Here we go. Decent higher low here with copper. So, you know, maybe promoting some potential upside with copper. There's the trend line down there that it's managed to break. So copper actually looks in pretty rude health. That looks all right. The 4 hourly's right on support down here. It might have broken it, but it looks okay. It looks okay. So copper, not a great deal to surmise from copper, except for the fact that don't like this head and shoulders pattern at all. But it has created this higher low here, and it's broken this trend line here as well. So copper looks okay. So that would suggest that there might well be some confidence possibly coming back into the market. The FTSE is an interesting one because the FTSE out of many of the other indexes has done pretty well. And you can see here as well on the daily, there's the support level on the FTSE, and people have been pretty confident. So this would suggest further upside also with the FTSE. Maybe we could be waiting for some data on this one to push it, but that actually looks like it's going to hold. Decent confluence area as well. So actually a decent looking trade on the FTSE. Well, not a good setup, but a decent looking price level on the FTSE, I should really say. That the price level looks all right, but if you look at the setup, what we've actually got is moved to the downside. So what we're really after here to suggest that this is going higher, this would be too expensive for me. Having to break this trend line, that'd be way too much. That's a well, nearly 0.5% gain before we can actually get into it. And then you are looking at highs that are only 15 pips away from a 30 pip stop loss. So that wouldn't be worth it. But what we can look for is maybe a break of something like this instead. So if that can get back above these levels here, that might be more attractive. There's 30 up, not quite. Not quite. It would depend when that trend line broke, but the FTSE looks okay. So some growth metrics look okay. They look stable. They don't look like they're breaking down. They look relatively stable. The Nasdaq is a bit tenuous actually. The Nasdaq actually looks a little bit negative here. And if we kind of compare what's going on with the Nasdaq to the the possible expectations of the dollar, this doesn't look too good. So so the Nasdaq actually looks a bit negative. The only thing with the Nasdaq is, I mean, there's that resistance level there, which looks like it's in play. Let's just make sure that line's relatively tidy. It looks like it's there. There's a trend line down here, so maybe bashing its head against this one more time. Not a huge distance away, but 140 pips away. So not quite 1% gain on the Nasdaq might well be in play here. Looks like a little inverted head and shoulders there on the 4 hourly as well. So Nasdaq looks okay. I don't like this dip is the problem. That dip's a bit of an issue, but it's kind of continued to the downside. There's a dip there, but maybe some stability there might just promote some upside. So Nasdaq's a little bit tricky to read. Oil's going to be an interesting one as well, because oil is obviously kind of associated with growth in the economy, in the global economy, and that's just hit a horizontal level. So I think there's a case to be made of some confidence potentially coming back in. Now, looking at seasonal data and COT data, the interesting play really over this week is for the dollar. Now, the dollar looks pretty strong when it comes down to seasonality. Not neither strong nor weak when it comes down to COT data. Neither strong nor weak when it comes down to the fundamentals. It's the fundamentals are relatively robust. They haven't really kind of showed too many signs of strain, so they're relatively robust. But the seasonal data is really explicit on the dollar. So I would be looking really, depending on whether we were thinking about confidence in the market or negativity. Now I'm looking really for an opening play of positivity, kind of for the first week of September. Traders are just coming back onto the desk. The summer's drawing to an end, if not over. The summer holidays are if not over. So I'm looking for confidence. So for that reason, I'll be looking for dollar yen longs, maybe even dollar Swissy longs. So let's have a look at the dollar Swiss. As I say, seasonal data is very strong for the dollar, and it is actually very weak for the Swiss franc and for the yen. So dollars, seasonally strongest against the dollar, against the yen, against the Swissy, and against the euro. So so let's see if there's any kind of setup on the dollar Swiss. And what we can see here is, let's make this a little bit bigger. What we can see here is an inverted head and shoulders. So the dollar against the Swissy is actually providing a buy signal. We've got this left shoulder here. There's the head down there, and we're looking for a right shoulder in this area. So this looks pretty good, and there's actually sort of a little bit of complexity to this this inverted head and shoulders as well, because there's even a shoulder line here. So it might be that we're looking for a move, and then sort of, just like it came down there, just to kind of give us some equal patterning here. So we might be looking for a move and a move, but trying to pick this up on the right shoulder looks pretty sensible. Let's have a look at a trend line coming in here. Yeah, that looks like where the right shoulder is going to be forming. So dollar Swiss looks like some upside could well be in play here. There's the hourly. So the 15 just needs to break this. Now, this is probably going to be subject to Swissy PMIs. And the Swissy PMIs are out in about 15 minutes, which, as I say, it's often better to wait for the news. I think now I've traded the setup over the news because the PMI data is suggested at coming at 43.7. From 43.3. Now the 43.5. The 43.5 is lower than the 43.7. So a little bit of gain, except for, in fact, let me show you that. But the problem for the Swiss is that this is still very weak. So this is the data of the day for that might either help or hinder the trade that I've taken. And it might even help or hinder what's going on here with the dollar as well. So we'll have a look at the dollar for some potential upside against the Swissy, but we're waiting for 15 minutes, and this 43.5 is below this one, so they're expecting a little bit of growth, but that's well below 50. And if we have a look at the chart here, it's in the lower band. So some weakness, potentially showing some weakness in the economy. Now, of course, a big jump here, maybe even up to 46, is going to be, 46, 46.5, 47. That's going to look relatively positive, because the previous high in the area is 46.4. So that probably won't help things out. If we kind of get a number like that, that's probably not going to help things out. But 43.7, I think that'll be okay. Anything below 44 will probably be okay, and that might well add some pressure to the Swiss franc because of the lack of growth over there. So we're looking for this potential break and retest on the dollar, and that would match, as I say, that would match the seasonals, and that would lead us up to around about, potentially. Let's just see what we might get out of that. Not the tidiest trend line. That one looks better. Well, I'll probably only really be confident enough to say the monthly pivot. Which would also match this high here. So that looks pretty good, actually. Monthly pivot would be a target point. So if you're looking for a decent message here, really you want to see this break. and it's got loads of room to the monthly pivot. So really, the idea with this trade would be a break and a retest here, somewhere along that trend line. Let's just get the monthly pivot into view here. It's there. So a break and a retest here, stops at the lows, and loads of room to the upside. So there's lots of areas, there's lots of opportunity for profit taking if this one was to work out. Call it 20 down and around about 60 up. So there's around about a 3-to-1 opportunity there. So lots of areas for profit taking. You know, a 2-to-1 is going to be in this area here, just around about the DR2. That high there, that's probably another area that it could get stuck. Let's just see what that is. Yeah, that's still better than a 1-to-1 if it can kind of get into that area there. So so that's my thinking. I don't know what anything you guys looking at particularly. I mean, I can go through the wave riders if you like, and see what we're looking at with the wave riders. But I can't show the indicators. But if you guys are trading the wave rider, you'll know the indicators. I can't show the indicators because there might be YouTube participants that haven't been taught the strategy. So if we just have a quick look at what the wave rider is suggesting, it's suggesting downside here for the Swissy versus the Aussie. Now, the big problem with this is that this area here is a little bit blocky, but this has seen a surge to the upside and then stability. So we're looking, you know, it could well take out this high. And if you were to aim for some downside, this would be the potential target just here. Now there's a risk to reward of 1-to-1 in accordance to the wave rider strategy. What we got here. See, I wouldn't aim for the 1-to-1. That would be problematic for me. There's a horizontal level along here. You can see there's a bounce here. There's a bounce here. And sometimes you're going to have to check your own horizontal levels. The wave rider, the robot will pick up certain ones, but this one really should be in this. Yeah, that's a pretty strong line there. So that would be problematic. You could still aim for the downside, but that would be that would be personally where I'd be looking for profit taking, 47 to 33. That I'd be looking for profit taking there. So not a 1-to-1. Euro dollar. Yeah, let's have a look at euro dollar. Now the euro dollar is not a wave rider today, I notice. Now the euro dollar is another one that seasonally suggests dollar strength. So if we have a look at this on the longer term timeframes to start with, on the monthly, there's a bit of room, but there's also this box. So we're basically at the top of the box, pretty much. I mean, we could probably use that actually. You know, the room to the downside is greater than the room to the upside. So that's the one issue. All of these closing prices here suggest we're on top of a resistance zone. The weekly looks a bit better, doesn't it, actually? Because we're sort of putting that down there now. So the weekly looks more like upside. There might still be a move lower before it goes higher, but that actually looks more like upside. The big problem for the weekly is this bar. This bar here. Because it's almost taken out all of the upside of the previous week's bar. So the last week of August, almost completely collapsed the third week in August's pricing. You know, if you think about this bar, the strong buying bar here, anything that goes below there, which is also below the monthly pivot, is likely to generate some downside. So if you're looking for a decent intraday trade, that actually looks all right for downside if it kind of gets below that area. So right now, I think there's two options with this. And I, you know, because of what's going on with the COT data and the and the seasonal data and the fundamental data, getting the lead from the seasonals is the only way to do it, because there is nothing on COT and nothing on fundamentals which suggest one way or the other for the euro dollar. So the only thing we've got in our favor is seasonals, and seasonals do suggest some weakness for the euro and some strength for the dollar. So given that, that's the direction I'd look for right now. And I'd look to aim to get a short trade in this area here. So trading this long at this stage doesn't look too attractive. There's a pretty significant sell-off there. Yeah, there's a break. This looks like downside. This looks like a test of an area and some downside. Let me just see what. Just going to make this line shorter, so I can get this trend line in the right place. It does look like it's there. It's going to get a bit sticky potentially. This could also be moved by the news. We'll have a look at what might drive it. Are you looking at this a bit more long term, Yasin, or just for an intraday trade? Yes, it's reacted off that by the looks of things. It looks like that's been kind of. Oh, intraday. Okay, intraday. Well, in that case, you haven't got a lot of room. 10. There's not a lot of room for downside there. I think this needs more information, because the issue is going to be this bounce point. So if you're looking to trade this, have you got a directional bias here, Yasin? Long or short, are you thinking? For the long, oh, short. Okay, cool. All right. Well, I'd agree with you on the short. So for the short, the way that what I'd want to see is this come down here, and maybe create a lower high, maybe at the daily pivot, to then come down again. The issue really is, I mean, stops are going to be there. So if it can create some sort of lower high, the price action is not very attractive at this stage, because there's not really a what I like to see is a range. You see this box here. Now it's kind of come out of this range. That would suggest that all the traders that missed out on this run are going to be looking to buy here. So they're looking to buy in this area because they missed out on the first one. So they're looking for a retest and they're looking to buy here. Now, anybody selling is likely to want to sell somewhere around the daily pivot or the low of this bar here. But that is just one bar resistance. It's not like this. This is a lot of support. You know, there's been a lot of trades kind of coming through here. So the fact that this has got a range makes it a bit stronger, makes it a better level to protect. This one here is going to be a little bit of a weaker level to protect. So it's going to be a tricky one to look for. But this is the sell zone, if you like. Let's see if we got enough room. If that was to sell off, if we were to get a sell there, you're going to need 9 plus the spread. So let's say 11 to the upside. You need it back to the lows, really. I think the bias is right on direction. I don't think there's enough in the way of chart data to suggest that we've got a tidy trade is the issue. Let's just have a look on longer term timeframes and see what they suggest. Yeah, this grouping down here is a problem. The trend line looks good though. It's not my favorite. It's not my favorite. That's the only way I could think to play it is wait for a bounce. If you've got signals, if you've got particular signals that you're looking for, and those signals line up, that's different because you got your you'll do your journal and you sort of make sure that your signals are working out. If you're looking at price action, just price action, there's a problem because I don't think there's enough just yet to generate a decent trade, but that would be that's the sell zone. You know, kind of coming up. It'd be even better if it took a little while and it kind of like hit this sell zone while hitting this trend line. Then you've got a potential trade. But even that is going to be a sell limit rather than indicators kind of giving you a decent entry. Now, the Swissy PMIs could push this down because of the correlation with the Swissy. Are you already in this, Yasin? If you're already in it, it does sort of change things a little bit. If you okay, you're not in it yet. Okay, so in that case, we are waiting for some sort of retest. See what happens off this level. You know, because I tell you what else might be a possible is that this area here doesn't hold, and actually what happens is it closes below, and then you've got a trade here instead on the retest of this level. Now the question is, does it have enough room to give you that? Maybe. So where this closes is going to be relatively pivotal. Now let's just check this data and see what's going to happen with the Swissy. And what I'll do is I will put the Swiss numbers next to the chart so we can see both. Oof, there's a few PMIs out there. The Euro's got PMIs today as well. No, we don't want to see that, do we? We want to see this. So we should be looking now. Are you seeing my whole screen here? This and the data here. So we're looking at this number here. Yeah, you got it. Okay, so we're looking at this number here and seeing how it's released. So a few more seconds here. Oh gosh, that's coming really strong. Oh, that's coming very strong. So that would suggest that this needs to be closed. So let's get rid of that. Get rid of that. I don't really want to see I don't want to see strong numbers come out of Switzerland and be in a trade to the upside. So better to save the cash and then see what happens after that. Which is sometimes why it's better to wait for the numbers. So let's think about that as a philosophy as well. If we're going to wait for numbers, we'll go back to the euro dollar. The bounce is coming into play here. the first bounce. So the first potential option here is coming into play. This here is what we're now looking at. Eurozone manufacturing PMI. Now, is there anything else today? That's it for today. So this Eurozone manufacturing PMI is the driver of the day. Now, if that comes in, to be relatively strong, which it might do off the back of this, so you'll see now. This number here should drive the euro off a support line. So this should drive the euro higher. What we're waiting for is this number to see if after driving it higher, this is weak enough to give us an opportunity for downside. So we should see the bounce here, and then we should see the bounce up to something like the daily pivot, or this bar here. And after we see that bounce, we're really looking for, maybe some signals of some downside, but not so much that. Really, what we really want is some nestling in here, kind of come up here and just muzzle around in this area. Then see some weak PMIs come from the manufacturing of the eurozone, and then we can look to go short. But I wouldn't now trade it before that, because those Swiss numbers are pretty good, and that will affect that. That will affect the trade on the euro. Okay. I mean, that's pretty much all I've got ready for today. I don't know if you guys want me to look at anything else, or you want me to go through anything else, and we can talk more about these numbers, because the thing is, this is really the kind of this is the process here. Now that Aussie Swiss, if you've closed that trade, that isn't a bad trade at all. You've only lost a third. You should have only lost a third, if that. You might have even lost less than a third of your position. So that's that's sometimes how we just have to react. We just close a position and just forget about it, and then move on to look for something else. But if you want to just sort of for me, the process is, what we're looking for really is we want to get a setup. I don't know if you're seeing my screen. You should be seeing me right here. We're looking for a setup, and that's going to be technical. We want a bias. Now, the bias can be created through the fundamentals, the COT, and seasonals. Now, all we've really got to go on are the seasonals for this week. Now, what we've got is dollar strong, and we've got the euro, we've got the Swissy, and we've got the yen, and they're down. So you're looking for dollar to go into here really. So we're looking for euro dollar short. We're looking for dollar Swiss long. And we're looking for dollar yen long. So the first thing that we've really got is a kind of list, for the week. This is our list for the week. What we'd probably look to try and do. The setup is something that will happen now. The thing that we have to be aware of is the driver for all of this for the week will be this. So we've got to really sort of be on top of the fundamentals. Now, the fundamentals for the week so far, nothing is really sort of standing out as a particularly strong currency. Now we've got some We got some data now for, let's just have a look at the data for the week. We got some data from, more data from Switzerland tomorrow. So that could be a driver for Swiss shorts. We got some manufacturing data from the US, ISM manufacturing data, which is going to be important. So that's a driver. GDP from Australia is going to be a driver. PMIs from the Eurozone. So we got a lot this week. There is a lot in the way of trades here. ISM non-manufacturing as well. So there's a lot of drivers now. Those will ultimately drive the market. So even though we could get into a trade, now this is always the tricky thing. The getting in before news, because there's a setup, is fine as long as you can cut your position if the news doesn't go in your favor. If you don't mind cutting the position if the news doesn't go in your favor, if you know, because the news is ultimately going to be the driver, and then you're waiting for the next setup and the next sort of news release. It's absolutely fine, but you might not get the opportunity, and it's going to depend on what kind of data it is. PMIs, you tend to get a bit more time. Something like CPI data, it starts to get a bit more volatile, so you may not get the time to cut the position. Interest rates, forget it. There'll be no chance at all to kind of cut anything out with if you get interest rates. Actually, I thought there was an interest rate decision from Canada this week. Let me just double check. No, it might be because I haven't got. Have I got the CAD? No. No, I think there's an interest rate from Canada this week. So it's PMIs. I've got a feeling it is on Friday. No. Okay, no, maybe I'm wrong on that. Okay. Oh no, it was Wednesday. I think I was looking at, wasn't it? Tuesday or Wednesday. Let me just come down here and have a look. Next meeting. September the 4th, yeah. September the 4th. Oh, here we go. Yeah, there's a rate decision. There is a rate decision from Canada, and they're looking to lower interest rates. So that's obviously going to be a driver for Canada. But there's nothing seasonal. Actually, Canada, the Canadian dollar is another one that season is actually pretty strong this week. So you got the CAD that's strong, but with a potential interest rate cut. So you know, you kind of want to wait for that cut and then take a position long. So we're waiting until probably because it's going to be volatile until then. Probably Wednesday afternoon for anything with a CAD. We've got a load of ISM numbers from the United States and sorry, PMI numbers from the United States and the Eurozone, which is fine to trade before those data points come out, but not before it on the day. So if we're kind of within the hour or so, it's better to wait for the numbers. But if it's the next day, then you can trade sort of in advance of the numbers and look for those numbers to kind of boost your position. Because you can't really, there's no way of guessing what those numbers are going to, how they're going to be released. But if you get a setup the day before, then it's well worth taking the position. Take the position and look for those numbers to improve things. So now what we're looking for, because the fundamentals are going to be the ultimate driver, what we're looking for is to see what's going to happen here with this manufacturing PMI. If the manufacturing PMIs come out and they are better than 47, probably, I mean, that's a big jump. From 43 to 49 is a big jump. 6 points. If this gets a 6-point jump, that's going to put it above 50, which means expansion. That would not be an environment to short the euro dollar. So I would avoid the euro dollar if that comes in strong. If it comes in weak, and really weak is going to be anything below 46, I would suggest, this position would still be valid. A short position would still be valid. So we're waiting now for these numbers to be released, waiting to see what the numbers are, And if the numbers are strong, we'll avoid trading altogether because it's going to be against the seasonals. It's going to be against the trend. We might even get a little bit of a breakout, but that's okay because that gives us a better price. It's the seasonals all week. So we can trade it. We're looking for euro dollar short all week, dollar yen long all week, and dollar Swissy long all week. But we need that catalyst. So far, we've got no catalyst, and actually getting in front of the Swissy numbers is absolutely fine if you can cut your positions, because you can, that's a third of a trade gone. No problem. We can do that 3 times before we've lost a full position. So if 1 out of those 3, or even 1 out of the 4 comes in and it gives us a 2-to-1, we're still well and truly in the money. But we can't hold a position if the numbers are against us, or I don't anyway. If the numbers go against the trade, I'm not going to hold on to the position because it's the numbers that drive the market, and the numbers were against the trade. We're looking for our numbers to be with our trade, with our short on the Eurozone manufacturing, and that means below 46. Does that make sense, Yasin? That's how I would time it. That's how I would think about the timing of my trade. I would be doing nothing with it 17 minutes away and nowhere near my trade area. I want it up here. Yep, cool. I want it up here. Then I want those numbers. If it got up there before the numbers, you could take a punt. But you're going to have to be aware that you might well get run over. But I want it up here before, when those numbers are released, decent numbers in favor of the position, and then the trade can be taken, but not before. Okay, so there's no Jeff this week because Jeff's traveling to Canada, but welcome back to everybody. Good to have you back in the room, and I guess we'll wrap it. Unless anybody's got anything else, I'm happy to look at anything else that you want to look at or talk about anything else in more detail. So the Aussie Kiwi, Aussie Kiwi, they're both risk on, which makes it a bit tricky. I mean, you look at the Aussie. The Aussie's in pretty good shape at the minute. It's a shame. The Aussie looks all right, doesn't it? It's just it was wrong against the Swissy. Usually, you're better off going risk on versus risk off. So risk off would be the yen and the Swissy. But these are both risk on. Now, one thing that is evident here is that there is probably going to be a suck to, I mean, that is definite resistance there. And there's going to be a magnet, if you like, into this zone here. Horizontal level there was a previous bounce. You got the monthly pivot, you got that. Now there's a little bit of room there. The problem you've got is if you're going to enter this right on the highs, by the way, where are you going to put your stops? 12 up. I mean, you could get it under the hourly bar, under that bar, but that's, again, this I wouldn't want to see. This consolidation period is the best place for me to try and get a trade on. When this breaks to the upside out of consolidation, you've got an area to put your stop. And obviously that is a target. But that's been going for 2.5 hours now to the upside. Where are you going to put your stop? It's going to be very, very difficult to trade that one. Even though I think it'll get sucked in here, the trend is already going. So if we think about trends in 4 stages, stage 1 is the accumulation phase. Stage 2 is the uptrend. Stage 3 is the distribution phase, and stage 4 is the downtrend. Now, if you think about this, this is already in a stage 2, but it's in a high stage 2. So you want to try and get the breakout of a stage 1, and there was a little stage 1 here of this consolidation. This stage 2 is what you're trying to get, but you want to get it at the start, not the end. So the only way now to play this is wait for a stage 3, which is going to be some sort of, consolidation around here, and then see if you're going to get a stage 4 to the downside. Or if you want upside, you're going to have to wait for some downside and then wait for another stage one kind of consolidation area before looking to go long again. But this is just, you know, it's in a terrible place now to try and trade this. So this one is gone and just not attractive. So not advisable would be the upshot of this one. Not advisable. If you're in, decent place to take a bit of profit off the table and then see if you can get the last squeeze to that monthly pivot before closing the position. That would be my personal thesis. And the reason I close the position is that you're likely, you know, rather than trading it through, you're likely to see a break and a retest. So if you still like it, then you'd retrade it here, close it all around this point, re-enter here. So now there's no trade in this one. It's just not attractive. There's no real money in it. Yeah, no risk to reward of any benefit. Okay. Just to kind of illustrate the importance of cutting positions. Look at what's happened to this Aussie Swiss. Hasn't come all the way down yet, but it's basically sort of bouncing now off the lower trend line. Just terrible, you know. There's nothing to do here now. Now the idea would be wait for the next wave. It's going to have to break that area, which would be pretty much the same price as the original trade, which is not a problem, but it'll have to break that area now. So this is why cutting positions is really important, and having a really clear idea in your head is really important before you get into anything. Euro dollar. So the euro dollar's done what we expected. It's rallied from this lower point here, bouncing off here. Now this is good now because it just means that there may well be a trade to the downside after a much better price point. So in 11 minutes, top of the hour, you're waiting to see if you got a setup. If the news is bad. If the news is bad and there's no setup, the way I would play it is there's no trade. Everything kind of needs to line up for this to be valid. But it has rallied now. Right then, I'm going to wrap it up then, and I'll see you next week. Have a good week trading. Now, it's really important you do your journals. You're welcome, Yasin. Really important you do your journals. Really important that you kind of keep everything up to date. You stay on top of your trading, stay on top of your mentality, and you just get your clear plan in your head. This is as much about protecting the account. In fact, that's the first rule, really. Protect your account. Do everything that you need to do to protect your account. And the best way to do that is do your journals. You know, this is a money-making process. So make sure that you stay professional, and losing trades not a big deal at all. But if you don't put your write your trades up, maybe you can take some learnings from every trade, then you are ultimately, you know, you're headed for the poorhouse. So stay vigilant, stay working hard, stay professional, and everything will fall into place. All right, guys, have a great week. I will see you next Monday with Jeff. I think my screen's frozen. There we go.